Andrew.
Hey Tom, how's it going?
Hey, good morning, everyone. We'll give a minute or two for folks to join. I'm right on time, luckily. How you doing in London?
Yeah, good. It's uncharacteristically it's raining, so
Uncharacteristically.
big surprise there. But yeah, good.
Cool.
How's the US? How's New York?
Uh, it's
All
getting
fresh.
warmer. I had a plumber here this morning because we had one for it was so cold. It was not pleasant for a good 2 week stretch.
Right. Our heritage is me calling you when you've got workmen in the
Oh,
house.
that's right. Wasn't the one time that was a plumbing issue as well when the dishwasher was leaking.
Correct. Yeah, that's right. Yeah, just this guy going back and forth.
Yeah. And now look where we are.
Well, yeah, how far we've come.
We'll give it what is it? One after, we'll give it till two after. We got folks coming in. Busy times, busy time of year.
Yeah, it's kind of really off to the races from the start of January.
I don't know when I'm coming to London, but we'll do our usual pint and dinner. Last
Yeah,
one, folks, if you're chiming into this was Rui de Freitas from Seawire joined us. We had a nice pizza.
that was good.
The
Recently
previous
read.
well, the previous one at Dean Street Steakhouse, I came out of that and I got a really nice article for my newsletter out of our conversation.
Yeah, that was the focused conversation was
Yeah, yeah,
generating.
that was more focused. Uh, all right, folks, we will get into it. All right, welcome everyone to the Quo Vadis Show. It used to just be the Quo Vadis, what I call it before. I think just live webinars, but this is the Quo Vadis Show. So, welcome everyone. We have Andrew Mull, CEO, co-founder of pubX. Welcome, Andrew. You're on mute.
Thank you for having me. Very happy to be here.
Yeah, so we're going to talk today about manual creation, sell-side intelligence. We have another name for that we're going to call that because I think that name's kind of really been taken a little bit by Index Exchange. And about rebuilding the media value chain for an agentic AI world. By the way, Andrew, congratulations. I see that you joined the agenticadvertising.org as a founding member. I saw that on LinkedIn this morning.
We did, adding to our retinue of Slack channels. Very proud to be part of it. Some really good conversations happening in there.
Yeah, let's just hope that that doesn't turn into the next iteration of the IAB because that didn't work out really well, my opinion.
I
Um,
think given the people behind this, it's unlikely to go in that direction, but yeah,
yeah,
for sure.
well, only because the original founder, president, CEO of IAB is now on agentic agentic advertising org. Anyway, it's my opinion. Let's be
I,
careful.
I I think you might find, and we'll go through this today, everyone's going to be eventually migrating to be agentic adjacent. So that's an inevitability.
Yeah, exactly. So, all right. Well, we have a couple things up front, folks. Why are my slides not advancing? There we go. So, we have Andrew Mola, as I just introduced. I'm Tom Triscari, Quo Vadis newsletter, co-founder of Advertising Economic Forum with Rob Beeler. That's March 18th and 19th. At day one is at Horizon Media. Day two is at the New York Times Center, where we have done it the past 2 years. So if you are in town and want to go to a really premium event, you should check that out. And also my day job is senior advisor at Landmark Ventures, working on in the ad tech, media tech, M&A practice at Landmark Ventures with my partner, John Kushner. Very busy times in that world and all across all fronts. And I'm sure, Andrew, as a founder, there's never a dull moment.
Absolutely.
All right, so quick little thing here, quick little plug. I have an event, very small event, tiny event, 9 a.m. to 1 p.m. On February 25th, so about a little over a week from now, at the Roxy Cinema in New York, called Last Media Dollar Live. It's about an online game that I created about preferences, originally based on kind of the thinking of Kahneman and Tversky around behavioral economics and putting people into a trade-off situation across 22 media channels. And we'll have Chad Stoller from PMG. He's global head of media at PMG. Stephanie Beach, the CEO and co-founder of the Marketeer Group. She has a long agency background as well. They're playing game one. And I got Joe Zawatsky from the investor perspective playing game two. It's a very interactive event. Tested it in London. Andrew was there. He can speak to it himself. Did that in December, and there was a ton of interactivity with the audience and how our stage contestants, like a game show in a way, make decisions in real time about where media dollars would flow if we put different media channels in one-to-one matchups. So basically, if you had YouTube versus linear TV and you had one last dollar to spend, which one would get your budget? Obviously, it's based on the case. Are you CPG? Are you auto? Are you retail? Is it brand? Is it performance campaign? So it's a lot of fun if you can join. It'll be a really good event. And by the way, pubX is a sponsor of that. Thank you, Andrew, for your continued support. If you do want to join, you can take 10 seconds to snap a picture of this little QR code. Use LMD25 for a 25% discount. If you didn't get it, just email me and I'll send you the information. All right, getting into it. I want to start with this. Brian Weezer, who probably many of you get his newsletter, Madison and Wall. If you don't, you should. So Google, it's been in the news, Google and Meta, but this is particular to Google, has been investing a lot of CapEx into AI and all the foundational stuff that has to happen to, stake their claim in that space and keep their business growing. And so just to make the point here for food for thought, Google's invested capital, total invested capital in the business as of the end of 2024 was $210 billion. 133 billion of that is fixed capital. That's what a lot of people call CapEx. And 77 billion is working capital. So that's your day-to-day operations stuff. We only care about the fixed capital for this particular point. So they're putting in, according to their earnings announcement recently, it's going to be 175 billion in new fixed capital. So that basically means Google is replacing its entire capital base over the next 2 or 3 years, which is unprecedented. And what that means to me is that the way things are growing and happening so quickly in the agentic AI world, that everyone else is betting on the bottom curve here in this little chart. And Google, this is all just basically schematics and abstract, but Google is betting it's going to go way faster. And that's why they're investing so much. So I'm going to take Google's bet that it's going to go faster than most people actually think. We believe it's going to be fast. It's probably going to be even faster. So that's just a point. Andrew, any comments on this before we get into the rest of the topical stuff?
No, I mean, I'm aligned with you. I think it's interesting because in this industry that we have these hype cycles almost annually, right? And there's the perennial joke of the year of the mobile. But I think this one feels and is different. There's a lot of fundamentals and foundational aspects here which are different to most of these cycles. And then you look at charts like this, and these are people that have really driven change in the industry, whatever your view on Google is, really putting their money and other people's money where their mouths are. And I think this is the kind of the backdrop to like, oh, it's just more hype, or it's another thing coming through. I'll get my head down and get on with it. It's like, no, this is fundamental change. And charts like this, I think, speak to that.
Yeah, and then the investment that Google is making is, I think, it's twofold off the top of my head. One, 75% of their revenue comes from search still, right? So how do you protect that business? How do you migrate from old school search to the way people are going to be searching with AI overviews or AI in general and monetize that? And the other thing is obviously cloud. So you could see a future where, 50% of Google's revenue in 5 years from now is search, and but cloud takes up the rest because that's growing. So it's going to be very interesting to see how this plays out. All right, so we've got now first question. Why, Andrew, when we look at ad CPT, now I believe it's pre-bid sales agent, why is it the most consequential shift across programmatic? I mean, there's the obvious answers, but what's the nuance of this in your
Yeah,
mind?
so I think for us, we're talking generally about ad CP, and there is the pre-bid sales agent, and that's part of the protocol. But the protocol basically is foundational to enabling agentic buying and selling. So you'll have a sales agent, we have a sales agent, you have buying agents, inventory agents, and everything that sits along the backbone of that protocol. I think it's an enormous shift across programmatic, and I think this is kind of like internet level coming out shift because it enables true behavioral change against many of the drivers that have existed. So most of the changes in our industry, including even programmatic, are iterative changes, which are needs-based, or you have media-based changes. So you've already mentioned like CTV budgets taking away from linear. It's an inevitable change, but it's ultimately a media-based change. What we have here is a change that is external to our industry, i.e., AI, greater AI capabilities coming into the industry
Hmm.
to drive change. And ultimately, this is still, even within programmatic, and we speak to a lot of traders, programmatic, hands-on keyboard people, DSP users, there's still manual scale aspects here. So they still only operate at the scale of the human enabled by technology. And what we think programmatic does, agentic in particular, is operate at the scale of abundance. And there's a lot of posts about this as well. I'm not the first person saying this,
Yeah.
but it takes everything to the nth degree. A computer speaking to a computer can speak infinitely. So we go beyond the human capacity to review things. So if we talk very specifically about the pre-bid sales agent, if we're talking about constructing deals, we have through the agent access to all inventory that is sold agentically. Inventory that wouldn't make the cut for previous deal type behaviors because maybe there's a really specialist website with great first party data, but it's read by 9 people a month. You can't get into an agency, they don't have a sales team, they're not in there representing themselves, but they've got this great audience. So if
Right.
that can be made available via a sales agent, and the sales agent can run across all of this inventory, all of this data, this audience, then you can start to aggregate up towards the same scale of campaigns that are required for people to evaluate now. So that's for us, that is the biggest change. We can now have total abundance, total transparency, massive purview over audiences, which are aggregated by these tireless machines which can run infinitely versus the scope of human capacity. So that I think is why this is such a massive shift. It isn't something that's changed. It isn't a better DSP. It's not a better UI. It's not a new audience. It's not a new media type. It's a fundamental shift in the way that information is sorted and put back together. And I think the outcomes are much higher return on ad spend because you have no wastage. You've got on the fly optimizations and improvements. And then ultimately, you've got publishers being fairly paid for their audiences, whatever scale they're at. And then this disincentivizes bad behavior. So you don't need to have this great audience that you build around to scale it up because you can be rewarded for having a small, great audience, as an example. And I
So
think,
yeah, I was just thinking like when you think about like, buyer bargaining power versus seller bargaining power in the programmatic sort of RTB world that we've lived in for the like last 15 or so years, it was really very little supply side bargaining power,
right.
right? It was all buy side bargaining power. And I think what you're suggesting is that agentic buyer agents, seller agents offers the opportunity. That opportunity still needs to be seized by publishers not being, I don't want to, what one way to put it, not being fooled again or not being foolish, right?
Right.
About who they let in the hen house, right? Because they did that and that didn't work out really well. And it's an opportunity to rebalance that bargaining power if done thoughtfully from the publisher perspective. Is that
I
true?
think, yeah, I think so. I think you're right to say it kind of levels the playing field. And bargaining power is a coefficient of the agency position. And the agencies had that because they used to go by hundreds of hours of TV spots, and you wouldn't do that on a one-on-one basis. I was always surprised that programmatic DSPs didn't really disrupt that model very much, even though the whole promise of like data-led buying was you buy the individual wherever they happen to be. But it didn't really happen because ultimately there's still human actors involved in that process. So it changed a bit, but it wasn't a sea change. But I think what we have here is this like total democratization where one really great impression can be bundled together with all of the other great impressions. Great being what are the KPIs for this campaign? What do we want to achieve? Does this impression meet that? And you can do that at an infinite scale. So you no longer have that buying power in the same way, but you also don't have human biases where
Yeah.
look at things and go, oh well, we're targeting, men. I'm a man. I read GQ, so okay, that's obviously on the list. And there'll be part of GQ that should be on the list, but there'll be parts that shouldn't for other parts of the campaign. So you now remove those biases, so you can buy beyond the scale, beyond those human biases. And I think a really interesting thing is we're going to see new audiences coming through. So publishers with different audiences that wouldn't previously have been on these plans because they're not big enough will start to filter up. So I think we really, this is great for advertisers and for publishers. It really does change the game in that way.
Yeah, no, yeah, we have to see how it plays out. I mean, what I want to get on to the next question. I'm just wondering about what you're seeing out there with like, speed of adoption. So one thing is the publisher perspective and having and building either agents or parts of what an agent would need for them, whatever their sell side agents are doing, and who's creating them, and what those relationships are. We can kind of park that for a second. And then you've got the buy side agents. We've seen, I think it was, wasn't it like Butler Till did something with Swivel? I think they did a test, and I think I saw another one recently too. But how much are you seeing out there where this is from a, I don't know, proof of concept perspective that there's two agents that are coming together and doing a deal?
Yeah, so I think Magnite and Scope 3 did one recently in Q4 as well. I would say this is very early still. So from an adoption perspective, um, there are there are numbers being thrown around which I think are, and this is something this industry loves, bundling, right? So using agents to prepare briefs or respond to briefs is very different to actually activating buys. So
Yeah.
I think this is very early in that respect. And then at the publisher level, where we're particularly prevalent, you've got everything from CTOs that are looking into this to teams that know they need to look into it this year but haven't got it on the agenda yet. So
Hmm.
it's very early, I would say. And I think we'll talk about pre-bid in a second, but I think that's going to move this along further. But we're laying the groundwork right now. We're getting the things in place. AdCP is great because it creates a protocol from day one. So you
Yeah.
have all of these different implementations. You won't have RTB endpoints that can't talk to each other because they've been configured differently and need to be redone. So it's great to from day one set a standard. Of course, there's more than one standard.
Yeah. And there's one other thing that's interesting too. Remember, like, I remember doing when I was doing a lot of consulting work for large brands all over the place, all over the world. And it was just amazing how the taxonomies were just so different everywhere, even within a company, like, even within a large CPG that's got several brands that they spend advertising dollars against, even within those brands in the same house. So the naming conventions just were all over the place, the taxonomy all over the place. And then RTB, between two parties who are in the RTB space, they had to reconcile all of that. It's interesting that the way that a large language model works is it doesn't really care there's no taxonomy. It'll figure it out, basically. That's less friction in the marketplace too.
Yeah, totally. And I think that's another thing about the human aspect of this is if you're encoding something in a fixed way and you make one error, that breaks the entire chain. I was speaking to an agency lead yesterday about this, and it's kind of like the Amazon warehouse model where you don't put stuff in order, but you track where you've put it. So in this case, the LLMs can decode everything. They can create within consistent frameworks. They can write in the same way, and they won't forget this. They won't put one word the wrong way around because this is encoded within the protocol. So you
Right.
get a lot more efficiency. Humans have done a really good job to the extent that they can, but again, that's another thing where these elements can fall over because of human error, which is absolutely bound to happen. And as you say, you set one thing up in a different naming convention, then the whole report collapses. You have to go QA it, you find out why. And usually it is something on that order of magnitude. It's not a massive error, but it has a massive impact. And I think that's
Yeah.
another thing that we get away from here.
Yeah, yeah. And speaking of that, there's a company out there that I'm friends with, Ben and Luke from the co-founders of Above Data, and that's specifically what the AI they've built does, which is around um, around taxonomy, right? Because if you can get that right using AI, then you can get a lot of things right downstream. Cool. So let me just move here to question two. There's a long question now, okay? So there's a little bit of there's one question at the end, but Prebid has taken over the code for ad context protocol. to develop the pre-bid sales agent, an open source framework enabling publisher-side AI to autonomously manage, negotiate, and execute ad campaigns. This initiative aims to prevent vendor lock-in and standardize AI-driven advertising, providing an alternative to proprietary AI solutions. I suppose that would mean like the big walled gardens proprietary AI solutions, while ensuring interoperability across the digital ecosystem. Good, bad, or indifferent? What's your view on this? Two
Yeah,
things really. One, the move of AdCP into prebid.org, and then the initiative, good, bad, or indifferent.
yeah. So I think the move is good. And firstly, we're pre-bid members. We know the team really well. We've been involved for 5, 6 years now, and I think pre-bid really is very publisher aligned, and we have a lot of shared ethos there. So I think this is definitely good. I also think moving it out of the agentic advertising organization means that you have a bit of a separation between the buying and selling, and then I think absolutely protecting from the major ad tech codes, the wall gardens, just taking this over and cannibalizing it is really important. So that's kind of fundamental to this. In terms of what it actually looks like when it comes out, this is not a, well, firstly, it's not out yet, but it's not a complete solution in that sense. So, what I imagine will happen here is something akin to what happened with wrappers, where
Mhm.
Prebid has their own wrapper, Prebid.js, and you find a number of publishers will set up and orchestrate it themselves, typically the larger ones. But then there is an entire vendor ecosystem that this creates where the kind of monetization type platforms will build wrapper solutions for publishers that can't. So
Yeah.
I expect you might see a similar thing here where for the type of publisher that can't just deploy its own sales agent, they might be people that are working around it. And we've been speaking, as you know, from middle of last year, we've been speaking to publishers about this for a long time. And one of the things that we're asked about is not can you do a sales agent for us necessarily, but can you build the tooling around it
Right.
means that we can use it. So can we track deals? Can we toggle deals? Can we have transparency finally? And it's a bit like, the hen coop comment earlier. It's can we have transparency on what's actually going on? So we see this as a really good thing because Prebid is a great framework. You can build on it. They're open for this. That's the entire point of it. And the
Yeah.
team's very supportive of that. So we can build better tooling for publishers, enabling them to actually not get wiped out by this, not have another change that comes into the industry that disadvantages them, but actually increases transparency and gives them insight into things that currently just happening decks in agencies or on the buy side that they don't currently see. So from that perspective as well, I think it's very positive.
Yeah, I want to touch on the word transparency because to me, if you've been around this industry long enough and you read the trade press, you go to conferences, see what's happening on stage. To me, it's like transparency has lost all meaning and it's in what it actually means, right? So to me, I break it down and I say, all right, because when one person says transparency, it might mean something totally different to another person. That's how bastardized the term has gotten, right? And it's like, to me, it's like from a publisher perspective, transparency, I think what they really mean is they're using it as an acronym, they're using it synonymously with the word trust. And if we say, what is trust? Trust is confidence in the counterparty's intent, meaning if I'm a publisher and I'm going to let someone into my ad server or into my stack anywhere, right? Do I have confidence in their stated intent? Because we saw what happened before. Can you just comment on that? And then I have one other thing I want to touch on.
Yeah, so I totally agree, and I think it's crazy that any industry would not have a shared definition of a word like transparency, but
It's
we
like the
don't.
word culture. It's like, what is culture? It's hard to define. It's like transparency's become that hard to define, even though it shouldn't be. You know what I mean?
Yeah, and I think again that's a coefficient of the scale that this industry operates at. You cannot have transparency on 14 trillion open web, open market impressions a month, right? So what people have done is kind of box this up into ways that they can understand it. And in that boxing up to the human scale, this is where a lack of transparency can creep in. Maybe the publisher is incentivized to slightly fudge their audience numbers, or the agency needs to get the spend away because that's how they get paid. And it's not even necessarily that this is an active thing, but it just happens as a coefficient of the scale that we operate at. I think again, Agentic removes that because so we have an inventory agent. We run over the 40 billion ads that are available to us every month. We carve this up into the right audience. And then as part of that transaction, we go back and say, hey, pubX has 122,000 people that you should get this campaign in front of based on your targeting criteria. And the buying agent goes, that's great. I need 200,000, but I'll go and pick up the other 78,000 somewhere else because they can do it at that scale.
Right.
Currently, the incentive is for the publisher to come back and go, did you say 200,000? Yeah, yeah, that's what I've got. And then try and get as close to it. And this is where you get audience extension and probabilistic modeling comes into play.
Oh, yeah. Well, yeah, that's a whole different conversation because it's like, yeah, I want to take I'm a publisher. I want to take the most money off the table from the advertiser that I'm, negotiating with. And yes, I have that availability. And then they really don't. You go out, you do a bunch of, third party kind of audience, buying, and you end up with low quality things. And then of course that's a downward spiral.
Right.
And again, we've seen how that's played out. I want to touch on one thing. Actually, before I do that, I mentioned the word as an example. I mentioned the word like culture, right? That's hard to define. I'm not sure if it was Brian O'Kelly, but this is where I heard it. Culture in a business, in a company, culture is when the people know what to do when the boss isn't around. You could extend the same thing to society, which is, people in society know what to do when there's not, someone, an authority to tell them what to do. So hopefully that's a good definition of culture, but we'll park that one that's for pints, Andrew. That one's for pints in London. Um, so let's go back about what was it? I don't know, 6 or so months ago. Pre-bid. Remember the transaction ID
Hmm.
thing, the little the I don't want to call it scandal, but the rub between the trade desk and pre-bid basically, right?
Right.
On transaction IDs. And that's interesting to me because I wonder in an agentic buyer, buyer agent, seller agent world where that becomes sort of a moot point. If you just comment on that. I mean, imagine like we already had buyer and seller agents 6 months ago or 8 months ago when that whole transaction ID thing happened. Um, just comment on that thought.
Yeah, so I see where you're getting at. So I think the thing is, it almost becomes irrelevant because one of the great things about Agentic is you've got real time on the fly optimizations against KPIs that can happen on an impression by impression basis. So really what I think this will move the focus to is outcomes and actually properly measuring outcomes and performance. I think a lot of what we've had is this kind of incremental steps through the industry to try and rein in bad actors. But it's being, okay, well, we don't have viewable ads, so we need viewability, or we don't have attention, so we need, and we've had these companies that have been very good companies, big companies that have solved these problems incrementally, and a new one has popped up. I think as long as we build in guardrails, and I think we can touch on this later as well, we get away from having this because we have agreed requirements, like handshake requirements between the buying agents, the selling agents, the inventory agents. Speaking with our CTO Alex about this today, and he was saying, this is probably actually a good case for blockchain where you can verify
Yes.
different transactions and things like that. Of course, you say blockchain, and I think fairly people either turn off or light up, and neither is necessarily a great reaction.
Yeah.
But you can have this decentralized trust that there will have to be these mechanisms that allow the ultimate, recipient or beneficiary of this, the human, to trust that this is happening. But you can also query an LLM to spit out the log files and to show you everywhere this ran. And there's a lot more transparency in that way as well. So I think maybe in
Yeah.
this world we wouldn't have had that kind of TID conversation because the problem that it seeks to solve shouldn't exist. And if we build this properly from the start, and we are at the start now, we shouldn't encode these problems from day one. And then I think we have this much more, to use this word again, transparent ecosystem going forwards.
Yeah. If Brian O'Kelly is gets to hear this, or if anyone on the in the webinar now wants to mention it, I think I did write about this. I can't remember, but basically, think about this. It's like if you could just get to a point where a buyer agent is ultimately saying and defining, hey, these are the outcomes, the types of outcomes that I'm looking to buy. And the seller agent is saying, hey, these are the types of outcomes that we're able to sell. And then in between, if trust is confidence in your counterparty's intent, then the agents should be able to figure out where that confidence is maximized in order to match up a buyer agent and a seller agent to do a transaction. Does that make
Right.
sense?
Yeah, it's exactly that. But I think as well, we go one step beyond it, which is the buying agent can go, well, why isn't it delivering then? And then it just stops buying and it can buy elsewhere.
Yeah,
So,
that's optimization.
you don't get a deck at the end of it where it goes, we got 78%,
No, there's no, in fact,
comms.
there's no deck and there might not even be a UI necessary.
Right, because it's about performance, but the advertiser sold more cars, right? And that's the whole ballgame here, right? So you see outcomes and then you see ROI, return on ad spend. You don't need these proxy metrics for is it valid, which the industry's grown up on, such as viewability, attention, because it's all about the outcome.
Right. I remember actually because I was at that ad CP event. I think it was in December and it was at Horizon. There's like 250 people there. It was a good event. You know, O'Kelly was there, Joe Hirsch was there, and Joe Hirsch said something that I really liked a lot. Um, yeah, there was like a main stage presentation, then there were three breakout groups, and it was in the breakout group that O'Kelly was running, and Hirsch said, "Look, there's five, as far as he said at the time and thought at the time, there's basically five types of agents: buyer agents, seller agents, measurement agents, creative agents, and I think it was ad serving agents." I added a sixth one, which you know about because which the sixth one is a financial agent, which is the one who can process from a receivables and payables perspective. That's what that agent does. But anyhow, um, if you got a buyer agent and a seller agent, and you got a measurement agent working on behalf of the buyer, that's mixed in through MCP, then it's all real time. It's like, yeah, great. I want these types of outcomes. And if it's not delivering, you know, and then it optimizes, right? Because they're all in communication with each other. That's how I'm visualizing it at least.
It's exactly that, but I think it's less verbose. It's just we have does this meet the criteria? Yes, no, or to an extent, and then a certain extent will be acceptable, and below it, it will be ditched, and they'll roll to the next sales agent in this case. So, but I think it's totally that. I think to the very first point, when humans start to trust this is part of this, and how they adapt it into their work streams is part of this as well. But I think the end vision of this, the ultimate expression of this, is exactly that.
Yeah. Yeah. Actually, and I did put this out in that article that you inspired after our Dean Street Steakhouse dinner, which was I don't think it's it shouldn't be in my mind from a buyer's perspective. Hey, does this meet my criteria? Yes or no, zero or one binary. I think it's logistic. I think it's a logic. It's 0 to 1 probability. So therefore, if I'm willing to pay $10 for this type of outcome and there's a 75% probability, then I'll pay 750. It's an expected value equation versus purely 0 or 1. Any
Right.
comment on that one?
Well, yeah, but you've got that downstream as your criteria and you've got it upstream as your match, right? So then you're negotiating around the expected value, but on an impression by impression basis. So
Right.
this is what's not currently possible. So using your matching algorithm, you're going through that for every impression, weighting it and expressing it, and then setting the right price based on the probability of the outcome. We our previous business, we built a DSP, we used machine learning to power it. This is exactly how we would estimate the outcome of any given impression for a second order impact, because it was a cost per acquisition, for example. You now have it going down, but also coming up because everything is fairly evaluated on both sides. So where they meet in the middle, this is where we think you get this kind of amazing accuracy of the right price for exactly the right piece of attention at that time against all the criteria that are put into the campaign, which is not currently possible, obviously, by an individual, but also isn't really part of how a DSP works right now because it's not interfacing with that information coming back from the sell side.
Yeah, it's going to be, I can't, I mean, I just love if all this started happening a lot faster just to see it in motion, see it like in the Petri dish. Um, but it will take place. So, all right, next question. We only have four, and then there's Q&A at the end. If you have any questions, just pop them into the Q&A box, and we'll take those questions as well. What time is it here? Let's see what we're tracking. Okay, we've got about 12 minutes left. So, everyone is talking about agentic AI, but the industry is split on what actually changes. I think we touched on some of this, but what is structurally different in this cycle? We touched on that a little bit. What previously could not scale in curated supply, publisher intelligence, and deal execution? I mean, we've covered a lot of it. Is there anything else to kind of cap off that longer discussion from the second question?
I think within the why not scaling again, it's a lot of the human aspects that we've sort of covered. I think the structural difference is really that this is coming from without, not within. So this change is inevitable. I envision a future in 10 years where I can have a knee operation by a fully automated AI-powered robot, and I can't imagine in that world publishers are still having meetings in agencies to get 5K campaigns for display on their
Yeah.
web. So it seems that this is no longer just kind of an internalized industry level innovation, but it's an external macro event that is happening in the world. And our industry is a very technological industry. It's a massive industry, and it seems inevitable that this will take hold here and will have change. I think really the barrier is trust and where the human involvement is, where the trade-offs are, and where this supercharges individuals or teams to perform at a much higher scale, and what that means for the industry, I think will be really interesting. But I think that's the structural difference here. This isn't coming from within. This isn't, everyone's going to be on CTV next year or maybe the year after. This is without. The technology exists in the wild. And with this kind of massive hype cycle, I think that there might be a bit of a drop off. There's a bit of a sell off in tech stocks currently. There's maybe a little bit overhyped, but the genie's out of the bottle. People are using ChatGPT, Gemini, to Claude, etc., to do their work for them. And you see these amazing things about, take this data and make me a 10-page deck that I can show my boss later. That already happens, right? So this is already integrating in standard workflows. I think it's inevitable it will happen here as well.
Yeah, it's interesting that I was just thinking about how, like, for example, in industries and in industry cycles, like let's take the oil industry, massive amounts of invested capital over, 100 or so years. And the technological innovation comes along, and they're going to resist that as much as possible because they've got a lot of vested interest. Um, the same could be said about other things, like, for example, in Los Angeles, California, back in, I think, around the 20s, Firestone, who happened to make tires, bought up and ripped out, and there was probably a lot of shenanigans, all of the cable car system in Los Angeles. Los Angeles used to have a cable car system like San Francisco, and they got rid of it because they wanted to sell tires. I think in this particular instance, the wave of AI is so strong that there is no resistance. I'm sure you would agree with that. Like, either you get along with the change, or you will be made basically obsolete. Which it could be a media agency, it could be tons of businesses in the space, DSPs, SSPs, right?
I think that's it. You can either lead or you can resist, but it is absolutely coming. To take it from LA to London, the biggest problem in London in 1908 was the amount of horse manure in the roads, and this entire horse manure cleaning industry popped up to try and get rid of it, and it was this big issue. And by 1914, it wasn't an issue at all because of cars. So these massive changes do happen. I think because we have a very innovative industry as well, we kind of feel there's always this is about to happen, and then never is really realized. But sometimes these big changes do actually come through. The world does actually change, sometimes and often slowly, but then you get these S curves and it happens very quickly. And I think we are on one of those S curves right now. So I think you're right. It really is. You either resist this and you end up being obsolete, or you embrace it. You have high performance. In the case of agencies, you deliver great value for your clients. In the case of publishers, you effectively monetize your inventory, all of your inventory at higher rates. You can win through this, and both sides of the ecosystem can win through this, but it has to be embraced.
Yeah, totally, totally. I think, yeah, that I'm thinking about, like, there's a value chain from buyer to seller of industry earnings. Usually you have a seller. Just think about it. You have a seller who makes something, you have a distributor, and then you have an end buyer, right? And a lot of times the distribution takes a lot of the industry earnings. It'll be really interesting given what we know about the RTB, programmatic supply chain with all the players in the middle to see how the industry earnings are going to shift. It's just going to be interesting to see how they shift. What else do we have here? So Andrew, we have one more. I think this is the fourth and last question. So, when we talk about you know, scalable curation, but what unlocks today's stack? I mean, from a publisher perspective, right? And the other related question here is, how can or should automation be designed to work in the publisher's, I should say, a little type of publisher's favor? And what guardrails? You mentioned that earlier. That's the one that we really want to get at. The guardrails are required to prevent AI driven buying from amplifying the past or existing risk? Meaning, are we going to get more of the same, and how can we avoid that? Because
Well,
again,
that's
that gets at that your 1908 London example, my example about the oil industry. It's like there's a lot of vested interest, right?
absolutely. And I think what we want to get away from is AI powered MFA, 2.0 on steroids, because obviously if we encode the incentives in the buying agents, sales agents can very quickly adjust to that, build the content in the background, and can sell on that basis. So we have to put guardrails in. Jamie's company, Compliant, for example, are putting some really great work, Jamie Barnard, around data practices. Companies that embody data practices were talking to them. I think these are the kind of guardrails that you'll have, which is kind of a third party ecosystem that verifies truth. What is real? What is the sales agent legitimately representing itself to the buying agent? And as long as this is encoded from the start, and we don't need proxies such as viewability, we can have real encoded incentives, then we should have a clean ecosystem from day one, and we don't need to get there. And normally what happens in this space is you have this kind of slightly wild west, and then you get to this more sort of true, clean, pure state. We can probably avoid that by encoding properly within the selling and the buying agents to start with. And there's a lot of great companies who are looking to do that as well.
Yeah, we do have one question. I want to show folks this though. If you've ever seen this, this is called, I have to find it here, snake oil chart. Are you guys familiar with the snake oil chart? So this is from Data is Beautiful. So this is, I think, what we're speaking about. Hopefully we'll see something like this. So this is about oil supplements. So this is about this. There's a whole giant data set behind this. It's a nice big spreadsheet. And it looks at these are all the things you can buy in, like, I forget what they're called, like, the health food types of places. And you got all these different things. And what it does is it says, here's the worth it line. And it's a vitamin D, iron. You can click on them and you can see more information, right? Is it good, strong evidence or weak evidence, right? Is it snake oil? And so this is a bubble chart. And so the bubbles that are the best rise to the top, and the size of the circle is the benefit to your health in this data set. This is kind of what we want to see going forward. We want to see the best bubbles rise to the top, and the ones that are bad for your advertising health as an advertiser, that supply should float to the bottom, and the agents should figure this out. I just want to get a quick comment on how you think about this visualization.
Exactly this. I'm going to steal this for our decks. So it's exactly right. So did it sell a pair of sneakers above the top? Great. Was it highly viewable towards the
These are
bottom?
publishers, these bubbles, right?
Yeah, exactly. So publishers, impressions, etc. So just having viewability as a measure, that could be low down, but you can look literally to the outcome. Did it sell sneakers? Did it get a sign up to book a test drive for a Fiat? Whatever the outcome of the campaign is, encoding that and measuring against it, optimizing for it in real time. These are the above the line things that you can do rather than these proxy metrics that we've relied on to hope, which we hope enforce quality, but of course, not always do.
Yeah. Just to point out, so it turns out that bee pollen does not cure cancer, and it turns out that potassium does not really have anything to do with blood pressure, fixing that. So that's good. So yeah, we want to avoid these black tea cancer preventions. And I find this really interesting. You can see it here. Just Google search snake oil chart, and you'll find it, folks. If you want to bring, there's other cool charts on that site too. Where is my presentation? Shoot, where did it go? Oh man, why am I? Sorry, guys. Where'd my presentation go, guys? Andrew, you're there, right?
Yeah, have you full screened it? Is it?
Yeah, I full screened. Um, what am I doing here? Oh, here we go. I got the question. All right. So the question is, Two questions now, actually. First one, some good electronic standards for automating direct buying and selling have been available for many years. However, it seems there has never been any meaningful industry adoption. Everyone's sticking with manual direct sales and programmatic beyond that. Why have previous electronic standards failed? How is this different? And by the way, I love this question because I'm a huge fan of the direct guaranteed deal. It used to be, you went to programmatic because you wanted to do audience targeting. Well, now you can do a direct guarantee deal with audience targeting. And I find that as a very simple use case for buyer agent and seller agent to come together. It's so less complicated than RTB. It's like, all right, great. I want to buy, I've got this much money. I want to buy this types of impressions. Who's got them? Right. Anyway, Andrew.
So I think it's a really good question. And it's something we've wrestled with, which is what is the gap? What can we challenge? What does this improve? As I said, I was speaking with a friend who's senior at an agency yesterday, and there's still the manual QA element of this, right? So if you're creating deals, there's still only a cutoff for scale. There's only a certain amount that can be evaluated, a certain amount that can be loaded into a DSP, tracked, trafficked, managed at a certain time. So whilst we've had the fundamental technology there in this kind of like electronic standards, the manual interface with that has still been problematic. So there hasn't been the agentic aspect over the top of it, putting aside the issue of trust for now, to actually operate at that scale. So we've been operating at the scale of supercharged humans, and this kind of supercharges the human by doing the work, which is a nuance, but it's different and it's significant. So we think, and we're all in on this, obviously, but I completely accept that not everyone would be. This is the difference. The agentic part, the infinite scope, the abundance, which I think is Joe Hirsch wrote about that. This is the difference now. It's the ability to operate at that scale versus having technology that enables you to operate better at your own scale. So I would say that is the difference.
Yeah.
If that doesn't
Yeah.
answer the question, let me know.
Yeah, yeah, and I think with the infinite scope, it's sort of like I think about some of that in terms of like if I am a hands-on keyboard programmatic trader at an agency, I'm generally going to be incentivized by the folks upstairs to do certain things, obviously. But when I'm setting up a campaign, the permutations across all the choices I make are in the billions, right?
Right.
You can't, there's no 24-year-old or the smartest, most intelligent grandmaster chess player in the world who can even deal with that, right? And
Right.
that's key. That's fundamental to me that we go from this very constrained world of kind of like trying to take all these options, permutations, and find the needle in the haystack. And I've got the right campaign set up, and then I'm going to go through all these optimization things later on. To actually, that all goes away, and the machine can deal with all the permutations. Hence, where we're using the word infinite here in a lot of ways. All right, second question. Do you see ad CP coming to all channels such as CTV and digital out of home eventually, or will it take a few years? Before, just a quick one on this. My answer is I think it should get to hopefully CTV faster in a lot of ways, just because that's where a lot of the incentives in the vibes are right now for money to go that way. So maybe it gets there first or better. Who knows? Andrew?
No, I think that's right. And so I would say definitely yes. And we have a partner company that works in the CTV space, and they are full throttle on this as well. And that's CIQ. We also see that Magnite have shipped their sales agent, and they are obviously all in on CTV as well. So there are the incentives, but there are also the players who are trying to push this through this mechanism too. So I would say CTV. Absolutely. I don't know enough about digital out of home, but I do imagine that this is going to be a full spectrum adoption. So if you're sitting in an agency, I think it's very unlikely that your programmatic teams, your CTV teams, etc., will be making use of this, but other programmatic adjacent type teams are not. So I think anything that has programmatic in it will see adoption here. Um, so I would have thought in both cases, yes.
Great. Well, that's a wrap, guys. Wait, thanks for the questions, folks. It was Joe and Nick. Thank you very much for your questions. Good questions. Thanks Andrew, always fun. Look forward to doing this and checking in again. I don't know, probably after Cannes or something to see because this thing is going to move really quickly. So it'd be come check back in again on what's going on and what you're seeing in the on the sell side of the world because you're having all those conversations and building really great technology. So thanks for joining us today.
Yeah, thank you so much. Always a pleasure, and definitely we'll check back in a few months.
And I'll see you in New York in I think in a week or so.
Yeah, 10 days. See you there.
Yeah, beautiful, beautiful. So, folks, last Media Dollar Live, February 25th at the Roxy Cinema. Be great to see you there. And also, don't forget about Advertising Economic Forum, March 18th and 19th. We'll be covering a lot of this types of stuff, but in very different ways, like we try to do here. So, thanks, Andrew. Have a great day, everyone.
Great. Thanks, Tom. Thanks, everyone.
Bye, guys. Hey, Andrew.
Hey,
Catch you later, man.
catch you later. Thanks a lot. Have a good
See
one.
you soon. If there's anything over the weekend, we'll chat over WhatsApp.
Yeah, I'll call you. That's
Okay,
one.
cool, man. Bye.
Bye.